For more on this, we're joined by Jameel Ahmad. He's Chief Analyst at Forex broker GTC. Welcome back to the programme, Jameel. Now, Asian markets are ending the week in positive territory despite the fragile ceasefire. How should we be assessing that?
I would say overall, Taibbi, that the atmosphere remains cautious. And of course, as we keep saying, since this unfortunate crisis broke out, it's still a very much sentiment-driven market where any headline can change investor behavior. But essentially, the ceasefire is helping investor confidence and rebuilding optimism somewhat. But you're completely right to point out we still have risks in the market, and every investor, and not just investors, I think everybody around the world is going to be keeping a very close eye on what happens in Islamabad this weekend with those diplomatic talks set to take place. But overall, I think the market moving a bit more positively towards the end of the week suggests that institutions, Wall Street, and those corporate investors are hopeful that this ceasefire will persist. Of course, political news is not something that investors are always going to be pricing into the market because it's not exactly our field, but there's some confidence there. And as you put out in your introduction as well, the US dollar had a sharp fall this week, and that also suggests that investors are giving away some of its safe havens and some of that cash is king mentality we saw since this crisis broke out, some of that starting to evade somewhat.
So do you see the decline in the US dollar as just a temporary reaction to the ceasefire?
Yes, because away from oil, the US dollar was the asset that benefited the most from this situation. And that was pretty much because, as we do see during geopolitical crises and very much unprecedented uncertainty in financial markets, whether that was the pandemic or the breakout of the situation between Russia and Ukraine, the US dollar does gain as a safe haven. And that's typically because investors adopt somewhat of a cash is king mentality. And we even saw gold initially fall during this breakout of this regional crisis in the Middle East. So I would say that the dollar fall over the past two trading sessions is basically based on the optimism that this ceasefire will hold. But of course, nobody knows. This is a market that very much, again, headline driven, and we don't know what tweets are going to come out next. We don't know what statements are going to come out next. But we are hopeful that this will prevail and cooler heads will be maintained.
Now, meanwhile, gold is holding at around $4,700 despite the risk-on move in equities. What does this tell us about the underlying anxiety regarding the longevity of this truce?
I wouldn't say it's because of the longevity of the truce. I would actually say that this is a reaction of the falling US dollar. And again, investors were quite clearly taking portfolio money out of gold and put it in the US dollar. And now we have that reallocation taking place where investors are putting money back in gold again. Of course, we don't know what the diplomatic world is going to look like over the next couple of weeks and months following this crisis. But if investors start to see that we're going to return to economic themes such as what's going to happen with central banks, potentially cutting interest rates later this year because we're looking at a 1 month inflation shock. Hopefully, it's not going to last longer than that. That's why investors might be putting some more money back into gold because they're thinking that now we've had this geopolitical regional uncertainty. Hopefully, it's going to finish, and then we're going to return to economic and macro themes, central bank drivers, and everything else later in 2026.
Jameel Ahmad in Dubai, thank you very much for that analysis.